Hey guys, thanks for jumping back into the cryptoverse. Today we are going to be going over Bitcoin. If you guys like this content, please subscribe to the channel and turn notifications on. And also check out the Telegram and Discord channel in the description below. So we're going to be looking at a risk update for Bitcoin. So we did cover this many weeks ago, so we're just going to do an update here. So essentially, what this channel is about is long-term positioning in cryptocurrency, and this video is on Bitcoin. So what we have here is the price of Bitcoin on a log scale. We have time, and then we have a color-coded risk dimension. So if the risk is 0, then it's historically the best time to get into the market. And if the risk is close to 1, so dark red, then it's really high risk and you probably want to consider getting out. So just consider that. I mean, this isn't financial advice, obviously, but this is just what I use. With that said, let us try to get a grasp on what has happened. So you can see during each bear market, there was this region where we hit this dark blue phase. We hit it here, here, and here. And historically, these have been the best times to get into the market. I mean, even if you had bought over here, you could have seen a 4x up at this point up here. So it is kind of hard, admittedly, to exactly tell what numerical values are on these that are represented by this risk indicator. So I've also obviously I showed this in a previous video, but I created this other figure basically where it also just shows the price here, and then the risk is the orange line. So, and the risk is on the secondary y-axis. So the price corresponds to this over here, and the risk corresponds to over here. So currently, the risk it came all the way down to maybe 0.33 or 0.34, and then it has popped back up. And I think currently it's sitting at around 0.42. So why is this important? So the reason that this is important in general, the risk is so that it can help people identify when they may want to enter or exit the market. And we've shown several different ways that you could approach this, whether you want to be more aggressive or more conservative. And so we are going to go through some of those in this video, just to give you an idea of what investors I've seen out there. And I bet you the ones that I go through are basically going to cover more or less most of what you've seen as well. So first, we have the aggressive and static dollar cost average investor. So this essentially is someone who's basically buying the same amount however frequently they buy it. So maybe they buy it every month, maybe they buy it every week, but whenever they do it, they always put in the same amount, and they don't really care what the price of Bitcoin is. They're very patient, but they're also aggressive with their investment. So, and by aggressive, I mean, they're buying even when Bitcoin is already up, a considerable amount in the short term. And there's not necessarily anything wrong with that. But it is just something to consider. So basically, they're buying when the risk potentially is even as high as 0.7, which would correspond to a price over here of this was that final run up to 20K. So clearly this is not quite 20K. I mean, this is around 1,000 here, so this is going to be several thousand. But still, I mean, they are risky, and they will continue to dollar cost average, but at some point they take profits. And it might be anywhere between, say, a risk of 0.7 to 1. Not that they were looking at this risk indicator, but by other metrics in the market. Now, of course, maybe they sold. Maybe they just bought in here and then stopped selling and then started selling up here, or did something like this. And we do have videos on different sell strategies. That's not the main focus of this video, but essentially it's the aggressive and static dollar cost average investor is more or less someone who's just putting in they're putting in money at whatever frequency they want, and they're more or less just putting in the same amount, and they don't really care about moves up in the market or moves down. all they care about is these long-term plays. And at this point, hopefully they're getting out of the market after dollar cost averaging in for a very long period of time. Now, one of the things that I do want to reiterate, and I think some people have gotten confused by, is remember that this is the price and this is the risk. So the blue line corresponds to this axis over here, and I'll move this down here so you can see the price. So the blue line corresponds to this axis over here, and the orange line corresponds to this risk indicator over here. So you can see that, during each of these, or during many of these cycles, we essentially hit risks above 0.9. Even in this run up here, it went above 0.9, it went above 0.9 here, and it went above 0.9 over here. So that's, just keep that in mind, because if we were to ever get to that risk level again, then you might want to consider, what are you doing with your portfolio? And some of you might say, well, how do you know this risk indicator is going to work as we continue on? And I did try to optimize this to account for, the maturity in the market, and obviously accounting for the fact that we're seeing diminishing returns from market cycle bottom. So can keep that in mind. And I also made an entire video where I fed it in dummy price data, a reasonable price data set, I think, and it responded how I would want it to respond. So, and also too, how I have, the same amount each month. I mean, I put 500. It can be whatever. I mean, it could be 100, it could be 10,000, but it's, the person's basically putting in the same amount at whatever frequency they're doing, which is why I just say X. Now, there's also, a moderate and static dollar cost average investor, and more or less the same thing. But they're not putting it in when, once the price gets above, say, a risk of 0.5, and they obviously didn't measure it exactly by this risk indicator, but it could just be something as simple as once the risk is really getting above 0.5, say in this case over here, the price actually was, it was up many times from its bottom. So it's people that are accumulating, essentially when we're in the bear market, and they're just stopped. They don't accumulate once we more or less get out of it. And that, that could correspond to just maybe a few months into the bull market, and they just hold on, and maybe they start selling over here in increments, or maybe they just hold it longer and try to sell it as late as they can. And then finally, we have a conservative and static dollar cost average investor. There's more that I'm going to go through, but this is the last one for this type. So this is the people that are essentially buying once Bitcoin is right near the 200-week moving average. And they basically are just, they're waiting, they're patient, they buy it only at this price, only when, there's the most fear in the market, and then they just put their money in at this price, and then they hold on for dear life, and hope that the price goes back up, which historically it has. And maybe they sell in increments all the way up, or maybe they just, sell it at whatever, maybe they wait till a risk of 0.7 or all the way up to 0.9, and then they sell. Now, this is for people who dollar cost average the same amount each month, but we've also talked about, dynamically dollar cost averaging, and that is where you would put in different amounts depending on what the risk is. So I would consider this to be an aggressive and dynamic dollar cost average investor. These people are people that are going to be buying Bitcoin at, after it's already up several times in a short period of time. And considering the history, they still would be doing quite well. And they're just taking a much higher risk over here. Because imagine if you did that in 2019, you were still buying all the way up to this risk level over here, and prices when we were basically at 14,000, instead of maybe selling a portion and then reinvesting what you made down below, or once the risk came back down. So obviously there's certainly trade-offs for different strategies, whether you want to be more aggressive or more conservative. And you can see that I've basically denominated like X and 2X, so maybe you put in 200 here, 400, 600, 800. So the further down the risk goes, the more money you put in, whatever frequency you're doing it at, or potentially maybe you just only execute one buy in this region, and then one buy in this region. You could do something like that. And if you wanted to, here's obviously just a moderate case, and then the more conservative case, which is the people, buying obviously again at near the 200-week moving average and dollar cost averaging the most once we, for the weekly candle on the 200-week moving average. Now we've also talked about these gray regions, which is, there are times when you can you might buy and you might sell. So I would call this the momentum driven, dollar cost average investor. So basically what it means is when the macro trend is moving up, you're buying, and when the macro trend is moving down, you're selling. So again, over here, you would have been buying all the way up, and then once it came back down, you would have been selling all the way down. And this, whether exactly where these buy regions are and the sell regions depends up to you. It depends on what your risk tolerance is. I mean, you could expand this obviously to look like this, or even like this, where it is where you're only buying again down here near the 200-week moving average, and you're only selling during that mania phase at the very end of a bull run. Or I mean, for instance, this was not really the end of this bull run, but it would have given you the chance to take profits and potentially reinvest later. So just keep this in mind. I mean, there's many different ways you can manage your portfolio, and I think that a lot of people will manage them in foolish ways, and we'll look at some of those. So here's the the I only sell the top investor. So essentially they're more or less buying constantly, and then they claim that whenever they get to the top is when they sell. And many of you probably know people like this that thought Bitcoin was going up to 1 million, and then they never sold anything, and it came all the way back down. So this is a very risky individual who is basically buying at any price, except they're claiming that they're going to sell the top. And then we have the hodler for life. I'm sure many people know these kind of investors. Basically, they just always buy Bitcoin, and they never sell it. And then they can do that if they if they're in it for the long haul, but it doesn't really seem like the smartest move, considering that when you're up 100x and you're not going to take profits. I guess that's your choice, but it just doesn't seem like the smartest move. And then here's I love this one, the I support blockchain but not Bitcoin investor. I mean, many of us know these people. So they're essentially, this means they're just always selling Bitcoin, and they're never buying it, but maybe they get it for whatever reason through by doing something, or it's a gift, and they just always sell it and then reinvest that in some other cryptocurrency. So this is the person that's just always selling Bitcoin and always saying that it's going to zero and that all the other coins have better technology and whatever they want to say. But I think Bitcoin is here to stay. I don't really think it's going anywhere. So I also don't really understand the strategy either. And then we also have the emotional investor. So many of us have probably known people that have done this, or have been those people ourselves, where you buy and you sell just based on how you feel that day and what your sentiment of the market, or the sentiment in the market. So if you're scared, then you're probably selling. If it's moving up, you're probably buying. But it just depends on how you feel that day, and it probably hasn't worked out that well. And I love this one, the dumb investor. So the person that just enters the market once it hits the news, and they're the ones selling it once it is down 80 to 90%, only to come back in and buy it once it's back on the news. So this is one of these are the people that help the people that buy down here make so much money, because they're the dumb money. They're coming in at the worst time. And they're getting out at the worst time, and they just rinse and repeat. And obviously some people are the dumb money once, they learn their lesson, and then they become the smart money. So I do want to just touch back on this risk indicator. I wanted to get through the video before I talked about it further. But the nice thing about this indicator is that you can see it spike right before, right as that price is peaking. So it's good because it's not a lagging indicator. We want it to be instantaneous, so that if we see that level get to 0.8 or 0.9 or 0.95, that's when we are liquidating most of what we have. or at least that's what I'm doing. Now, some of you are probably wondering what this risk indicator is. I have not published it yet, but I do provide updates for it on my Patreon channel. So if you want to join the Patreon channel, you can. You can see it here. So if you just sign up for the $30 a month tier, you will get patron-only updates, which include risk updates, and I do it basically every 2 or 3 days, or if someone requests it, I'll do it sooner. But just to give you an idea of where the risk is. Now, I should mention this is not for day traders. I'm probably going to work on something for a shorter term risk indicator, but this indicator is for longer term moves in the market. So it's for people who probably have, they have 9-to-5 jobs, they have families, they don't have time to understand or even care about what the markets are doing on a day-to-day basis, but they want to know in the grand scheme of things over many years, when is likely a good time to dollar cost average in, and when is likely a good time to dollar cost average out. So if that's you, if you really want to know these risk levels on a weekly basis or every 2 or 3 days, so that if we get to say a risk of 0.6 or 0.7 and you want to take profits, then just subscribe to the Patreon channel. It's only $30 a month. You'll also get invited to a patron-only chat room, and you'll get a subscription to Bitcoin Letters, which I did publish the first one for free, and it comes out every quarter. So the first one was 21 pages. So check that out if you haven't yet. So I hope that kind of gives people an idea about managing risk in your portfolio, especially within Bitcoin. I think it's important, and I think it's an overlooked part of the market where people, or part of the investing strategy in cryptocurrency. Just holding your portfolio forever, while it might sound cool and you can make a meme out of it. I doubt the rest of your family cares about something like that, especially when you watch something go up and come back down. So if you want to kind of be ahead of the game, and you want to have a better idea of when you should be buying and you should be selling based on historical data, then check out my Patreon. And if you don't want to pay in US dollars, just contact me, and we can set something up where you pay in cryptocurrency or whatever. So we'll figure that out. Again, if you guys like this content, please subscribe to the channel and turn your notifications on. I would appreciate it if you liked the video as well. And if you want to discuss these charts, go to my Telegram channel or my Discord channel. I think that will basically wrap it up for this video. And again, it's if you do go to the Patreon, it's just patreon.com/IntoTheCryptoverse. So in a previous video, I asked people what mix they thought my dog was, and I got a lot of really good answers. And a lot of people did get the correct answer. And I will show you her first, just in case you want to quickly guess before I say what she is. But some of the funny answers were part bat and part rat. So I thought those were pretty funny. So I'm curious if you guys do think she looks like a bat, because I have thought that before. So this is her, and this is a stuffed animal bat. So this belongs to my son. And I can kind of see the resemblance. But anyways, if you want to guess, you can pause the video and guess. But she is a mix between a Chihuahua and miniature Pinscher. So if we want to continue the saga here, let's try to guess what her name is. And I'll give you a hint. It's a name after a town/city, whatever you want to call it, in Africa. So I'm curious if anyone can figure it out. But I think that will wrap it up for this video, and I will see you guys next time. Bye.